All right, guys, the CPI came out today, and it was actually worse than we thought, only by 0.1%. But the market didn't really react. In fact, the market largely went up. It did not go down. Bitcoin at 26,229, and the stock market, as far as I'm concerned, it actually stayed pretty even with the Dow Jones, the Nasdaq. It went from like going up a little bit to dipping a little bit, but it's within 100 points. The Nasdaq is still up 39. So why did the inflation rate being bigger than thought, why did it not actually affect the market? Well, we have to take a closer look at the numbers. Yes, inflation did rise from 3.2 to 3.7 overall. But most of that rise was caused by August's rise in terms of energy prices. That means the price of gas went up in August. That's not something the Fed or interest rates can control. That largely has to do with OPEC. Yes, I hate the whole thing that Biden actually shut off the pipelines, because that psychological factor means that it gives the Middle East more control over the American price of oil, which sucks. He needs to open up the pipelines again, which I doubt he'll do. But from that small note aside, the Fed raising interest rates, they know, really won't affect the temporary rise in inflation. And that part is temporary because since the start of September, gas prices have already gone down about 5%. At least here in Wisconsin. So that fluctuates from month to month. So we're going to look at the core CPI, which is what the Fed actually looks at more. The core CPI actually came down from 4.7 last month to 4.3. Now, if you read the reports, they're saying like it rose month over month by 0.2% or something. But year over year, it's actually come down last month from 4.7 to 4.3. And that's what the Fed actually looks at, because the core CPI excludes food and gas. Food is obviously affected by gas and it's fluctuating a lot. But realistically, if I look at the prices of the supermarket, prices really haven't gone up for food since pretty much the beginning of this year. So that's also coming down. As a side note, interesting fact, like the actual groceries, amount spent on groceries and amount spent eating out is only up very, very marginally. The big increase is like the price of food at like cafeteria type style dining places like schools and like employee restaurants or employee meal places. Those are up like 50% year over year. So talk to your boss, see why he's raising the cost of food by so much, even though the grocery prices haven't risen that much. Maybe he just wants to squeeze out as much corporate profit as possible. That could definitely be the case. And in that case, that's actually not Joe Biden's fault or anything, or like the government's fault. That's your boss's own fault for raising prices so much because he's greedy and he wants to squeeze out as much money from you as possible. But the core CPI is what we're actually going to look at right now. Going down from 4.8 to 4.7 to 4.3 is quite a big deal. That's half a percentage point drop. And the core CPI going down makes it much easier for the overall CPI to go down. Housing rent actually, like median rents actually dropped from last year to this year, but as a reflection of what most people are paying, it's still slightly increasing, and that'll take a couple more months to really have an effect. The Fed is seeing that their raising interest rates has already had big effects on the economy, or is starting to have big effects on the economy, and they'll probably be way more careful. I think after the core CPI is released, going down from 4.7 to 4.3, they're much less likely to actually raise rates this year than they were actually before. So I do believe there will be at least a pause in September, and most likely a pause in November. Now, if they pause in November, that means they're not raising this year, and there's a very good chance they'll start reversing in spring 2024 or summer 2024, which is what we're all looking for. And I think that's overall why markets responded somewhat positively to the news, because the markets were afraid that I think the markets were more afraid that the core CPI would go up rather than the overall CPI, because everyone knows the overall CPI can vary a lot. And that's why crypto didn't really pump when the overall CPI actually came down pretty drastically over the last 2 months, or when we had that report in July and the overall CPI came down, the core didn't really come down. It was mainly because energy prices got a little bit lower. And likewise, energy prices got a little bit higher, but people didn't react drastically because people know that the Fed actually looks at core CPI more than overall CPI as the a measure for whether they're going to raise or lower interest rates. So that's definitely one thing that we have to take into consideration, what the Fed's looking at, what we're looking at, and what the future prospects are. And plus, there is the other Fed guy saying essentially that, you know what, we're pretty much done with raising rates. And I think that's going to go into the kind of calculations of Wall Street and business people too. Now, the markets did turn around a little bit, at least the Dow did. It's like negative 70 something right now at the time of recording this video, pretty close to market close. And the NASDAQ's still like plus 39. So since crypto follows the NASDAQ more, it's slightly up for today. Despite the fact that we didn't dump, I don't expect us to pump that much either. The reports weren't bad, but they weren't great either. It's not like inflation just magically went down to 2%. So the Fed is probably going to keep their like 5.5% interest rate up for at least the next couple of months to see how things shake out. But the job market has actually been weakening. Unemployment is slightly ticking up. And core CPI, in terms of like everything besides gas and food, has actually decreased significantly from last month. And I do believe it'll keep on going down for this month. In fact, like the Wall Street Journal reports, and CNBC actually reports that, yes, it is a temporary rise in an overall falling trend in terms of inflation. And that is because the core CPI is actually coming down. I actually can predict in October, when we get the September reports, that like the inflation will probably be like around 3.0 again, because September's gas prices have not risen. And it looks like they might actually drop a little bit more towards the $3 mark here in Wisconsin rather than at the $3.50 mark. It actually has been for the last couple of weeks. It's already dropped to about $3.29, $3.25, and I do think there's a good chance it'll actually keep dropping. The demand for oil definitely fluctuates time over time, and the markets are always forward-looking. That's why I think Biden should just threaten to open up the pipelines, because just the threat of opening up the pipelines and pumping in much more gas will actually scare a lot of these big oil producers back into submission and make them stop doing cuts. That's basically hijacking the inflation rate right now, because obviously the Saudis and OPEC, they're just looking at the fact that they actually control the supply and they can just squeeze the supply as much as possible. That's why they're all doing like voluntary cuts to basically manipulate the price of oil up. But if we actually have some say in that, they won't be able to do so quite as effectively, and that will definitely bring the price down 100%. So that's generally what I'm looking at right now, and I'm hoping that for like definitely some more improvements in the price of goods. I hope like people actually kind of like take a step back in their spending, as some of them are like going to do right now, because like money is getting a little bit more scarce, and the Fed is in no way ready to do like QE again. They're still on the QT cycle, but they're loosening on the QT cycle as well. And I don't think we're going to head into a major recession. We had a recession last year in 2022. I don't care what people say, like it wasn't really a recession. It was 100% a recession. We had 2 quarters of negative growth. The government may not want to admit it was a recession, but it was 100% a recession. So I think we actually gotten past the worst part of it. I don't think like the US economy is going to crumble. I know there's a lot of worry about the national debt, but I think that's really, really overblown. The national debt does not work like your personal debt, and Americans actually hold most of American debt. So that's like something that I think has been overblown in like especially the crypto circles, for people that, you know, crypto people always want to think that personal debt is the same thing as government debt, which is not. There's a lot of more things that go into government debt. Like there's a lot of countries in Europe that actually owe us a lot of money. Most of the debt's actually held internally by us. And other countries are, like some of the other countries like China, are trying to reduce the reliance on American money, but they're not being that successful in doing so, because their money is kind of pegged to it, first of all. And, you know, the other countries' currencies, they're not really all that reliable. No one wants Russian rubles right now. The Chinese yuan is kind of like sharing the fate with the US dollar, and people still trust the US dollar more than the Chinese yuan. The Indian rupee is rising, but it's going to be a while before they get enough dominance to actually do anything. And the other countries' currencies just aren't stable enough, or people don't really trust them enough. So there isn't like a viable replacement right now. So for those of you that are like in crypto that are crying the US is losing its dominance, it might over the next 50 years or so, but it's not going to be anytime soon. And I don't think you're going to have a backup plan when the US dollar isn't the international currency of trade, because it's going to be for the next 2 or 3 decades at least, if not more. So based on those things, I actually think our economy is going to do fine. It will actually recover. We just need these high interest rates for a little bit more. I think they will start taking them down at the beginning or middle of next year, and that's when Bitcoin will pop because of that, because of the halving, and because of the approval of the ETFs. So the thing is, like, I do expect Bitcoin's slow growth as the inflation rate like winds down, as they stop raising the interest rate hikes, and as like legal regulations actually get better for crypto within the United States. So right now, that's why crypto and the economy did not go down, despite Jerome Powell, despite like the CPI going up today in the United States. It's because the core CPI actually came down, and the rest of the CPI is likely to follow soon. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you, and have a nice day.